Hello, XRP community. Welcome back to the channel, and buckle up, because today's update could be one of the most consequential we've covered all year. While most of traditional finance is asleep for the weekend, crypto refuses to take a day off, and the tapes are printing green. XRP is hovering between $2.27 and $2.28, up just over 2% on solid volume. That might not sound like fireworks, but remember, quiet gains on a day when equities are dark signal genuine demand flowing in, not just the usual high-frequency arbitrage. Stellar's XLM is tagging along with a 2.5% pop to 24 cents. Hiderot's HBR is edging towards 16 cents with 2% upside, and the broader alt market shows the same slow, heartbeat steady climb. Healthy, sustainable, no FOMO blow-off top in sight. Now, the headline that's lighting up every Telegram chat. In a Singapore press conference this morning, Ripple CEO Brad Garlinghouse confirmed that Ripple Dollar, Ripple's NYDFS-approved dollar-denominated stablecoin, has been accepted as collateral across the full product suite of recently acquired brokerage giant Hiderot. If a name is new to you, Hiderot clears and settles billions in spot assets, structured notes, and synthetic derivatives every single year. For Ripple Dollar to be plugged in as a universal guarantee means traders and liquidity desks can post it 24/7, 365, no waiting for bank wires, no daylight cutoff windows, no cross-border delays. That's a textbook definition of utility, the sort that regulators actually like because it removes friction without adding opacity. The knock-on effect for XRP is immediate. Ripple Dollar relies on XRP as its native bridge asset whenever it jumps from one fiat corridor to another. Picture a London-based fund hedging an Asian equity swap. It posts Ripple Dollar at Hiderot. That Ripple Dollar converts to XRP, moves across the XRPL in seconds, and cashes out on the Hong Kong side in local currency, all before the trader's caffeine wears off. Every hop consumes a drop of XRP liquidity. Every drop triggers a micro burn, and every burn tightens the long-term float. Demand up, supply down. Economics 101 doing its quiet work in the background that Garlinghouse's timing could not be sharper. In Washington, Treasury Secretary Scott Bessent revealed that President Trump intends to slam tariffs on any nation still stalling trade talks when August dawns. Markets love certainty, hate brinkmanship, and tariffs are the nuclear option of uncertainty. Add Christine Lagarde's latest speech in Frankfurt warning that unregulated stablecoins threaten monetary sovereignty, and you have a perfect geopolitical storm. Europe inches toward its digital euro CBDC launch. The US hints it wants private sector dollars instead, and Asia is already experimenting with multi-CBDC liquidity pools. Into that chaos walks Ripple Dollar, fully regulated, instantly settled, globally bridgeable. It's the Goldilocks answer. Too compliant for Europe to dismiss, too private for Washington to fear a state-run token, and too fast for Asia to ignore that. Let's talk numbers. Hiderot's annual collateral turnover exceeds $25 billion. If even 10% migrates to Ripple Dollar in year one, that's $2.5 billion in stablecoin float continuously sloshing through XRP corridors. Conservatively assume a 2 basis point fee burn per hop. You're looking at $500,000 worth of XRP permanently destroyed just from Hiderot's desk flow each year, an amount that compounds as volume scales. And that's one broker. Multiply by every prime service Ripple is courting: Amina Bank in Switzerland, Latin American remitters, Asian treasury desks. And you see why so many analysts have stopped treating XRP as a meme and started valuing it like fintech plumbing. Regulatory posture matters just as much. Garlinghouse emphasized that Ripple won't rest until it secures a full US banking charter. A license puts Ripple on equal footing with correspondent banks, but with technology that clears in seconds rather than days. It also unlocks FDIC-insured custody for dollars backing Ripple Dollar, silencing the last major critique: counterparty risk. When a regulated bank issues the token and an equally regulated network destroys supply on redemption, you get the transparency regulators crave and the efficiency traders demand. Of course, macro headwinds never sleep. Basin's tariff timetable could whipsaw forex markets and spill over into crypto pairs. Lagarde's central bank rhetoric hints at an EU stablecoin clampdown if companies sidestep the digital euro. But markets price risk. What they truly fear is ambiguity. This week, for the first time in years, policy tracks look visible. The US may ban a CBDC and bless private stablecoins. The EU may launch theirs and ring-fence competition, and Asia will likely run both systems in parallel. In every scenario, Ripple Dollar plus XRP fits somewhere in the value chain, either as the private sector option, the neutral bridge, or the regulated alternative to experimental CBDCs. Zooming back in, here's what that means for your dashboard. Watch minted supply. Yesterday, 14 million Ripple dollars hit the ledger. Today, 16 million. If those numbers keep stair-stepping, adoption is snowballing. Track escrow releases. Ripple scheduled XRP unlocks are linear and transparent. Burns are probabilistic and utility-driven. When you see increased burns against flat or declining new supply, the supply-side squeeze is underway. Also monitor corridor spread compression on Ripple payments. As more liquidity providers quote Ripple dollar pairs, bid-ask spreads should narrow. That's an on-chain metric you can literally measure block by block. Tighter spreads attract bigger tickets. Bigger tickets force even more liquidity to pool, and you get a positive feedback loop that traditional FX desks took decades to build, but here it unfolds in months. None of this is pie in the sky. Today's Hiderot integration marks the first real test of enterprise-grade, always-on, collateralized trading action on Ripple dollar rails. If it delivers the promised savings and fail-safe settlement, rival brokers will copy rather than compete. Remember how one Wall Street house adopted electronic equities trading in the 90s and the rest followed? That playbook doesn't change. Only the asset class does. So what's next? My eyes are on Asia-Pac. Singapore and Hong Kong regulators have shown they'll greenlight stablecoin pilots provided risk is ring-fenced. Now that a Singapore press conference just flashed Ripple dollar live collateral, expect regional lenders to run the numbers. If ODL corridors light up between Tokyo, Singapore, and Sydney, the 24/7 FX market just met its blockchain alter ego. Bottom line, Ripple Dollar's integration at Hiderot validates stablecoin collateral beyond DeFi sandboxes and into regulated capital markets. Every dollar minted is another use case. Every use case is another drip of XRP demand, and every drip of demand is a counterweight against macro volatility. Yes, tariffs, CBDC politics, and central bank job owning can rattle charts short-term. But infrastructure adoption is a one-way street. Once Treasury desks experience instant finality, they don't go back to three-day wires. If this breakdown fired up your strategy brain, do the usual YouTube dance. Hit like to boost a signal, smash subscribe to stay ahead of the narrative, and drop a comment telling us which institution you think will be next to flip the switch on Ripple Dollar. Real utility is the engine, real value is the destination, and every mile marker we pass makes the finish line less a dream and more an address on a ledger. Stay curious, stay on-chain, and as always, keep watching the rails beneath the system, because that's where tomorrow's value flows are being written today, one settlement, one burn, and one game-changing partnership at a time.